Hello everyone, in this session we will understand the VAT filing cycle. This includes VAT registration, tax periods, return filing, payment of VAT, and record keeping. By the end of this lecture, you should have a clear understanding of how VAT moves from business transactions to reporting and payment to the tax authority. So let's first understand what is VAT. VAT or value added tax is an indirect tax charged on the supply of goods and services. It is collected at each stage of the supply chain. Although businesses collect VAT from the customers, the actual burden of VAT is borne by the final consumers. So, here is the VAT filing cycle overview. The VAT filing cycle is a continuous process. It starts with the VAT registration, followed by the collection of VAT on sales, payment of VAT on purchases, preparation of VAT returns, filing of returns, and finally payment or refund of VAT. So, here is the VAT registration. Businesses are required to register for VAT either on the mandatory or voluntary basis, depending on their turnover. Once registered, the tax authority issues a VAT registration number. This number allows businesses to charge VAT on sales and recover VAT paid on purchases. So, here is the VAT collection on sales, which is also called output VAT. So, when a VAT registered businesses make taxable sales, uh, it charged on VAT to its customers. This VAT collected is known as output VAT. So, output VAT must be clearly shown on tax invoices and recorded in the business accounts. So here is the VAT paid on purchases, which is also called input VAT. VAT paid by a business on its purchases and expenses is known as input VAT. Input VAT can be recovered from the tax authority provided the expenses are eligible and supported by valid tax invoices. So here is the VAT return period. So VAT return period are filed for specific tax periods which may be monthly or quarterly is decided by the tax authority. Each return includes transactions that occurred during that tax period and must be filed within the prescribed deadlines. So here is the VAT return preparation. Before filing the VAT return, uh, businesses calculate total output VAT and total input VAT for the tax period. The difference between the two determines whether the tax VAT is payable to the tax authority or refundable to the business. So here is the VAT return filing. So VAT return filing are usually filed electronically through the tax authority online portal. Businesses must ensure that all figures declared are accurate as errors or omissions may result in penalties or audit. So here is the VAT payment or refund. If output VAT is higher than input VAT, the businesses must pay the difference to the tax authority. If input VAT is higher than the output VAT, the businesses may claim a VAT refund or carry the excess forward to the next tax period subject to approval. So here is the record keeping requirements. So the VAT law requires businesses to maintain proper records including sale invoices, purchase invoices, VAT returns and related calculations. So these records must be kept for a period specified by the tax authority. So here are some penalties for non-compliance. Failure to comply with VAT requirements may lead to penalties for late filing, late payments, or incorrect returns. So, non compliance may also trigger audits and additional fines. So, Uh, to summarize, the VAT filing cycle includes VAT registration, collection and payment of VAT, preparation and filing of VAT returns, and payment or refund of VAT. Timely compliance and accurate reporting are essential to avoid penalties. So, this is the closing of VAT cycle. So, thank you for listening. This concludes our session on the VAT filing cycle. Have a good day.